And then you come to the question of, well, how do we do that in an affordable way? And maybe there are betas in our portfolio that can be run passively, but there needs to be part of our portfolios where we can be flexible, where we can be dynamic, and critically so as we start to think about private assets and alternatives. And when people go, you've got your balanced equity bond portfolio and they're jumping straight to private credit and private equity without really thinking about this whole universe of more liquid alternatives where you can be wrong, can change your mind, can gradually ease into, lock up illiquid assets at the right time and at the right price. I think one, more geopolitical risk and uncertainty and a shift away from globalization, kind of after, 40 odd years, to higher rates and inflation, or at least more volatile rates and inflation, and how asset classes kind of perform in that. Three, I think, larger, more sophisticated asset owners, as consolidation continues, asking themselves, what should we run in-house? What do we need of our asset manager partners? And I think four, I hear from a lot of asset owners that, we've outsourced to, a lot of parts of our portfolio and spend a huge amount of time reviewing asset managers against their very narrow mandate. Whereas what we're missing is the question of where, not just how much should we have in equities, and then within my North America sleeve, which managers do I have, but how much should I have in North America, and how much should I have in tech, and where else can I diversify that? And does that all need to be in equities? What have I got in my real estate portfolio or in my infrastructure and otherwise? And I think that need, both from a risk management, as people keep seeing everything correlate to one, as well as from a need for higher real returns. I think those are a number of things that's driving this change. So I think this is just good investment management, and I think it's critical in the kind of uncertainty that we're facing.